Have you ever wondered what would happen if the entire US economy suddenly crashed? What if one day banks stopped lending money? Businesses started shutting down. Millions of people lost their jobs. And the stock market collapsed? Could America recover? Or would the entire world feel the impact? The truth is, the US economy is one of the most powerful economic systems on earth. And if it crashes, the consequences could spread across the entire planet. Let's break it down simply. The United States has the largest economy in the world. Trillions of dollars move through the system every year. People work jobs, companies build products, banks provide loans, and investors put money into businesses expecting growth. Everything works together like a giant machine. But economic systems are built on one important thing: confidence. People need confidence that businesses will survive. Confidence that banks are stable. Confidence that money will keep flowing. Once confidence disappears, problems can begin very quickly. Imagine millions of investors suddenly becoming afraid. They begin selling stocks. Stock prices start falling. News channels report panic. Social media spreads fear. More people start selling, then more, and even more. Suddenly, the stock market crashes. Now, why does that matter? Because millions of Americans have retirement accounts, investments, and savings connected to financial markets. When markets crash, people lose money, sometimes huge amounts of money. And when people lose money, they spend less. Instead of buying new phones, cars, or vacations, people start saving every dollar. Businesses immediately feel the impact. Stores see fewer customers. Companies earn less profit. And once companies start losing money, many begin cutting costs. How? Layoffs. Millions of workers could lose jobs. Unemployment starts rising. Families become stressed. People struggle paying rent, loans, and bills. Then, something dangerous begins. Banks become nervous too. Banks survive by lending money. Home loans, business loans, credit cards, car loans. But during economic uncertainty, banks often become more careful. They approve fewer loans. Businesses suddenly struggle getting money. Small companies suffer first. Many businesses rely on loans simply to survive. Without access to money, some shut down. Now imagine thousands of businesses closing, then tens of thousands. The effects spread everywhere. Restaurants, stores, factories, technology companies, even large corporations. But here's where things become global. The US economy does not operate alone. Countries around the world trade with America. Many nations depend heavily on American consumers. If Americans suddenly buy fewer products, factories in other countries can also suffer. Exports decline. International businesses lose revenue. Financial markets across the world may panic too. This creates a chain reaction. And history shows us this can happen. In 2008, America experienced one of the largest financial crises in modern history. Banks collapsed. Housing prices crashed. Millions lost jobs. Families lost homes. Entire industries struggled. The crisis started inside the United States, but quickly spread worldwide. Governments across the planet had to react. Now you may wonder, can the government stop an economic crash? Sometimes governments and central banks step in. They may lower interest rates, inject money into financial systems, support banks, or provide emergency programs. This is designed to keep confidence alive, because confidence is everything. If people believe recovery will happen, the economy often stabilizes faster. But if panic continues, problems can grow larger. Now here's something many people misunderstand. Economic crashes do not always happen overnight. Sometimes warning signs appear early: rising debt, inflation, housing bubbles, bank failures, weak consumer spending. Experts constantly watch these signals because once pressure builds too much, the system becomes fragile. And when one major problem appears, everything can move very fast. But despite crashes and recessions, the United States economy has repeatedly recovered. After recessions, after market crashes, after financial crises, growth eventually returned. Businesses adapted, jobs returned, markets recovered. Because economies constantly change. Still, economic crashes leave lasting damage. Some families spend years recovering financially. Some businesses never reopen. Some workers permanently lose opportunities. That's why governments, banks, and economists constantly worry about financial stability. Because preventing panic may be just as important as fixing the actual problem. At the end of the day, the economy is not only numbers and charts, it's people, workers, families, businesses, and everyday decisions. So, if the US economy ever crashed again, the effects would reach far beyond Wall Street. Because when the world's largest economy shakes, the entire world feels the impact. And that is exactly why people continue asking, what happens if the US economy crashes?